There has been so much money printing by the Fed, quantitative easing or QE, so much of it that the Fed actually had to unwind it. They unwound 4 months of money printing in one day. That's a record. I'll explain coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. This is shocking, okay? The Fed has been doing so much money printing, it's actually creating some distortions in the financial markets. And I'm not talking about yet the financial markets that you see, the Dow, the S&P 500, the bond market, interest rates, that sort of stuff. It's the stuff sort of behind the curtain, or at least it's so boring and, well, complicated and confusing, it really doesn't make the headlines. So not last Thursday, the Thursday before that, in one day, the Fed pulled more than 4 months of money printing out of the system, yanked it out. So undid 4 months worth of money printing in a single day. There's no need to say it, but I will. That's a record, all right? And it flies in the face of the entire narrative, everything else that they're saying that they're doing. So very, very interesting. Let's get into the details. Number one, we've had the Fed's balance sheet absolutely balloon, okay? So the Fed, just to make sure we're all on the same playing field, is basically the bank, okay? So they're the ones that finance the overall economy. They have 2 mandates, and yet, so basically they exist for 2 reasons: stable prices and maximum employment, and yet they've really, really been stretching. I mean, lots of people are questioning, well, is the Fed overreaching? Do they have multiple mandates now, more than just those 2? Are they trying to do too much? And I actually have all of those questions and concerns. But their balance sheet has absolutely exploded. Now, look at this chart. And for the context, I'm going to show you the one directly from the Fed that shows 08, okay? So in response, if we went back even further, we'd see that the Fed's balance sheet is very, very flat, very steady, okay? Not a lot of movement. And then in 08, we had the great financial crisis, the Great Recession, where the entire banking system, the entire finance system was on the brink of collapse. No one wanted to buy anything. No one could borrow anything. Unemployment skyrocketed. It was long and slow, and it was painful, okay? And it took the Fed expanding their balance sheet by $1 trillion, going just below $1 trillion total, expanded it to about 2.2 trillion, then backed off to about 1.9. So they expanded their balance sheet by $1 trillion. And then as you can see here in this chart, they weren't really ever able to stop. It just continued going. It plateaued for a little bit, and then wham, okay, wham. 2009, the fall of 2009, we needed to start printing again, and then 2020 hit. And I'm not saying this is an overreaction. As of right now, you could say, well, it was needed, it was necessary. We voluntarily shut the country down, shut the economy down to try to keep, for health reasons, right? And so the Fed has printed, taken their balance sheet from 4 trillion now to $8 trillion. It's unfathomable how much money that is sloshing around the system, okay? And so that's what's happened. All right, that's how the Fed's balance sheet has ballooned. That money is now, for the most part, we're not going to look at M2 money supply, but that money for the most part is out sloshing around the economy. Now, how have they done that? They immediately printed a whole bunch of money. They put a whole bunch of money in their checkbook. Okay, I'm not going to show you that chart, but they created a whole bunch of money in their checking account, and they've been writing checks on that. That money is about to be used up over the next couple of months, about to be fully injected in the economy over the next couple months. They did all sorts of other things, and then they said, we're going to do quantitative easing, which is geek speak for print a certain amount of money every single month methodically. You can trust it, you can plan on it. $120 billion a month we're going to be injecting into the economy. Now, This seemed appropriate again, and I'm, no master in this, but seemed appropriate at the time, March of 2020, April of 2020. That seemed about right. But then as the economy went from, ground to a halt and stopped to, surging, we've kept 120 billion a month. And just for context, going back to that great financial recession, 08, 09, the great financial crisis, I think we topped out at 80 billion a month. And so we're doing 50% more than what we did back in the 08, 09, 2010 crisis, the great financial crisis. And we've been doing it now for over a year, almost a year and a full quarter by now, almost 15 months. And so that's when you look at that chart of the Fed's balance sheet, that's those stair steps up. We're adding 120 billion in money printing, quantitative easing every single month. So that's how the Fed's balance sheet is continuing to expand. Many people have said and expected that 8 trillion is going to be 10 trillion to 12 trillion over the next few years, because the Fed has said we're just going to continue to be doing this quantitative easing. Like they've said we're not even thinking about tapering. So they're not slowing down, and that creates the problem. That creates point number 3. Now we've got imbalances in the system. There's been so much money printed over such a short period of time. We've seen deposits at bank accounts or at banking institutions absolutely skyrocket. Banks don't know even what to do with this money. They've got to do something with it, try and get a little bit of interest. And so what are they doing? They're buying treasuries. They're trying to put the money on deposit back with the Fed, trying to earn some interest. Interest has been, because of all of that demand or all of that supply. I mean, interest rates are essentially zero. And so there's all sorts of distortions happening behind the curtain in the financial system. And what did this result in? A reverse repo, okay, which is, I'm going to explain that in just a second, a reverse repo of nearly $500 billion one day, 2 Thursdays ago. One day, the Fed did almost $500 billion in reverse repos. Now, I'm not going to get into all the details, but a repo is an asset on the Fed's balance sheet. So a repo, think of it like this, is actually the Fed using money to buy a security. So they're taking their own money that they just printed, okay, that they just created, and they're buying something, meaning they're going to give someone that cash that they just created and hold onto a security or hold onto a note. So that's them injecting, a repo is them injecting cash into the economy. So a reverse repo is the exact opposite. They sold investments to about 50 different financial institutions. They sold them and collected almost $500 billion, drew it out of the economy. $500 billion. And again, if you do that math, we're doing 120 billion of money printing every month. And then we just suck out, $485 billion. That is a significant unwind. Why? Well, some speculators are saying, there's just an imbalance. We've got way too much money out there and too few assets, i.e. inflation. And so the Fed needed to do this emergency session to try to levelize things with the financial institutions. Maybe some of that stuff is so complicated it's even over my head. Maybe, okay. Number 2, but I more so think of this. I more so believe in this idea that, listen, the Fed has come out and said, we're not even going to thinking about tapering, okay? So we're just going to keep interest rates at zero. We're going to keep injecting $120 billion a month. Everything's fine. We've got to see much more progress in the economy. We still need this, even though housing prices are all-time high, copper prices all-time high. We're seeing serious inflation that flies in the face of transitory and Costco even came out and said, this is not transitory inflation. We are seeing real inflation. And so the Fed is saying all of this, no, we still need this money printing, blah, blah, blah. But then behind the scenes where it's not going to make the headlines and most investors won't panic, all right, we're going to secretly pull a whole bunch of that money back out of the system. I think that's what they did. They had to continue the facade of we're going to keep printing, we're going to keep supporting high asset prices. but they're starting to see the ramifications of that. And they needed to do something that wouldn't panic or scare the markets, but they needed to do something to try to manage it or unwind it. So out of the back door, they pulled $500 billion out. That's my suspicion. We will see. We will see if these reverse repos become more of a trend. We'll see if the Fed starts thinking about tapering or slowing down their policy as we see housing prices skyrocket and all sorts of cost increases. So we will see, all right? What's this mean for you? You gotta be on guard. Now is a time where risky investments have performed phenomenal. Don't take too much risk. Don't be speculative. Don't be over leveraged. Make sure your entire financial situation is well grounded, right? And that you're not overexposed to debt, that you're holding on to a decent amount of cash reserves and emergency funds, but then still investing and investing for your long term in your retirement, taking the right level of risk for you. Work with your CFP on that. If you don't have a CFP, you can always contact one on my team. Find us online, corehorn.com. That's Corehorn with a K. WiseMoneyShow.com. You can find us there as well, or just give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.